Hey guys, it's Ryan from leprivatebanker.com. Just wanted to touch base on a few things I'm going to be covering in the forum over the next month or so when I get some time. I've got a few presentations that I've been putting together, but I just haven't had time to finish them, published in standard. They're going to be about Midas Vwaps, mapping support and resistance level, an updated version, and just more information about the correct data to use. I mean, there is no right or wrong way to plot the data. It's just very unique to the trader and the system that you're using. But obviously, we've been using back-adjusted data for. I mean, I've been using back-adjusted data for a long time now, but been doing a lot of research over the last couple months and just sort of changing my opinion on the data that we use, and I'm kind of leaning off of the continuous contract data now, and I'll explain this in the future why I'm leaning this way. But anyway, so in this video here, I'm going to be using continuous contract data, where previously I'd normally use the back adjusted contract data. And again, like I said, it's a very advanced understanding the different data sets and why we use them and the different reasons for using them. But in this video, I will be using, as I said, the continuous contract rather than the back adjusted contract. Anyway, another amazing day here on crude oil, and I'm just going to run over what I was trying to do today. So, I mean, off of the open, I mean, we opened 91.90 right here, and you can see the market just pretty much went sideways. But what I was trying to do is I was trying to sell the market back down to let me just zoom in across here. This was yesterday's trade. So what I was trying to do was sell the market back down to this Vwap, and we can see this big established area in a day. So what happened yesterday is we sold off, and so there was no agreed established prices all the way down, and then it came down to these prices, and we just see this huge accumulation, and this Vwap established this 91.20. So this is a very important area and very important information. I mean, a lot of volume got traded here, showing us agreed prices. And obviously, we came in today with a 400 tick range on the previous day, and we opened in the middle of it. Well, not in the middle, we opened towards the lower end of it. But in regards to the weekly Vwap, this is where we were opening. So we see this rotation back up, and we came to this the previous week's mean. And at this point, I mean, I was looking for rotations back down. We were at a delta threshold, and I'm not going to go into that. But I was looking for responsive sellers to be responsive here, with a possible push back down to this 91.20 area. That was my first hypothesis on the day. But as you can see here, we see this two-way trade coming in, and we just see no sellers pushing the market down. And what we did is we basically just see a liquidity vacuum back up to pretty much 50% on yesterday's range, and last week's developing value, or last week's value area higher, which happened to be this week's mean. I mean, when I say the 50% retracement, I mean this is yesterday's range, and as you can see, we sold off, we bounced back up to 50%, and then we sold off again. But anyway, like I was saying, we just see this liquidity vacuum back up to here, and I was wrong. I mean, I had two attempts short on this. I mean, I wasn't sort of too sure off the open, so like I said in the chat room, I was approaching this with small size, and once I stopped and the market come back into balance, and the market showed me it was right, I would have started to add to my position with full size. But because I wasn't too sure what was happening here, I mean, probably would have been best to sit on my hands. But with what we were seeing with the flat overnight range and just pretty much two-way trade on the overnight session, I was expecting responsive sellers to be active from here and push this price back at least to the mean, and then possibly to this Vwap at 91.20. But I was wrong, and I ended up taking pretty much two scratch trades. I took one scratch trade, and I took a small loss trying to sell this area, and then obviously crude oil inventories came out, and I sold it again from up here. And I took a little bit of heat on the trade, and I ended up managed to get one scale, and then I ended up getting a stop on the rest of my core. So it kind of had like two small losses and a scratch. So at this point, obviously, I started to dig myself a bit of a hole this morning, which is fine. I mean, these days happen. You can't always be right. I was wrong. It's good to highlight when I'm wrong, because most traders who educate and people who show their trading. They don't really go over the losses, and I think sometimes the losses are the most important things to highlight, because when I'm right, it's obvious. Sometimes it's obvious when I'm right, and you don't learn anything from that. But when I'm wrong, that's when you learn the most. You can see when I'm wrong, why I'm wrong, and how I tackle being wrong. And obviously on these days when I was explaining in the chat box, I was explaining what I was doing, and I said when we were sitting on top of value like this, I was just going to exit my positions, because there's no point sitting in a market where we're starting to see an imbalance happen and we're starting to see accumulation at top of value, because it's only going to do one thing. All the shorts are going to get too short, they're going to cover, buyers are going to step in, and you're going to get run over like I did this morning. But the main thing is I maintained my risk, and I stopped my losses being too big. So anyway, I had one scratch and 2 small losses on the day. And then we see this big liquidity vacuum up to this area, which I just talked about, being the weekly the areas I went through. And it also happened to be last month's mean. I mean, obviously we've started a new month, new quarter today, so there was bound to be some high activity going into the start of the month and quarter. There always is. So as I said, we see this liquidity vacuum up. So once we come up to here, and one thing I'm going to highlight is we broke the 1 time frame in. I'm not going to explain 1 time frame, and everybody on the forum who knows, has had the education, knows what happens when we break the 1 time frame in normally. So we came up here, the market broke the 1 time frame in. So what I look to do is, obviously with the references and the context of the market, is I started to establish a short for a mean reversion. So the market came back up to the 1.5 standard deviation. This is a discounted price, and I started to establish a short here. I didn't have a clue that we were going to see this massive move, but obviously again in the chat box people were asking me what my target's going to be, and I said I'm going to target Vwap and the other side, and I'm going to see what happens from there. So I got most of my position filled into Vwap. I started to hold my runner, and I got most of my runner filled into the low. And once we see this massive selling come into the market here, and which is obviously a higher time frame presence. I mean, this all happened in one period. I mean, you can see here that H was very imbalanced, and we sold off. We cleaned up the poor low on the day, and we showed us a very strong imbalance in the market. I mean, as I said, I pegged this Vwap. I had one from here that I was looking at, and most importantly, this one from here. So we came down, and I got most of my targets filled, and then we bounced back up, and we see this nice accumulation into the mean. So what happens here? Well, how does the auction process work? So we came in, we see 2-way trade, we see an auction to the developing value area low, it auctions back to the mean, and the probability is it's going to auction back to the developing value area low. So after this inventory came into the market. So what happened here is I had my core running still. I only had small size of my runner at this point. We auctioned back. I started to establish another core, or add to my core position here. As to me, it was quite obvious that we were going to try and come down. We were going to run the stops on. Let me just quickly bring this up. So we had these stops, these key stops. This is where we opened, and I was trying to sell because I wanted to come down. I wanted to see these key stops where the overnight inventory was long. So obviously when the overnight inventory is long, there's going to be weak stops here in the market. So what I was looking to do when I was trying to sell these areas is I wanted to come down, I wanted to see them run the stops below these levels. But obviously the market just see a liquidity vacuum up to the references that I just said. We see sellers step in, and as I said, we see this nice selling come in H. We took out the low on the day. So then the expectation is to see it come out and take these lows down, take these stops out of the market. And obviously I explained all this in real time in the chat box on the forum, and you can see here the market came down. We run the first set of stops, second set of stops, third set of stops. Once we hit these stops here, the market just went into a free fall, and we spiked all the way back down to yesterday's lows, and there's this huge stop run. I mean, you can see on the footprint here, we can see the stops getting hit. I mean, when you see these big zeros in the market, it's just someone's come in, they've sold the market, they've hit all the sell stops in the market to cover. I mean, and because people are bought, people are long, people are buying, and then what they have is a sell stop. They have a sell stop below these key levels. So when the market comes down and you see these sellers selling into sell stops, it just creates a big frenzy of selling. You can really see when the market came down, we hit yesterday's low, what happened? Look at these sell stops getting hit. Boom, just a massive sell stop liquidity vacuum down. And it's not as clear on these other levels, but you can see the liquidity sort of backing off as they sort of as they start to run these stops down. But This was the clearest one. This is a very very clear example of the stops getting hit below yesterday's low of day. But just an awesome day overall. I mean, like I said, I dug myself a bit of a hole, but this is how you bounce back. You keep your losses small. You read context and you wait. And obviously, I was lucky where this happened. But I mean, I was just in the right place at the right time. Read order flow, and then I responded accordingly to what the market was telling me. And as I said, it was just very obvious. It was quite obvious at the time, once this had happened, that we were going to at least try to come down to this 91.20. I mean, as soon as the market started to get aggressive, then there's just no reason to get out. I mean, you can see here the market bounced down, we came up, they started to reference that 1.5 standard deviation, and there's a big accumulation here. I think there's like a 300 print they've got filled just into here, if I can just quickly show that. So there was someone that was selling 300 on the bid. Let me see if I can find it. Right here. So the market sold off, we bounced back up, and there's someone sitting there with a resting sell order of 343 contracts, and the market literally hit it, and immediately selling came back into the market, and they just start to pound the bid down, and just take out all these stops, like I said. So it's just an awesome day, awesome day. I mean, yesterday was awesome. It's just been awesome the last couple of weeks on crude oil. Very lots of opportunity, lots of range to be taken advantage of. So. But yeah, that's how I tackled the day. So, like I said, a couple scratches, a couple little, one scratch, two sort of small, manageable stops, and then this awesome trade down, which basically dug me out of my hole and just gave me a lot of opportunity on the day here. I mean, we ended up seeing a 250 tick down, and I got short from 91.80. That's where I got short. So I managed to capture most of this range down. And the ad here was beautiful, so just a very good day. But right now we've got some pretty good support at this 90.40, and we are currently still bracketing. We're still seeing two-way trade in the market, so until we do see a breakdown dislocation of this $90.40, then the plan is obviously to buy the lows and sell the highs until we see this next directional breakout. I mean, we've got sort of three poor lows down here now, so I mean, the expectation is to break down further here. I mean, I don't know if we're going to break down and free fall down to the next sort of levels, or if we're going to see a sort of fake out breakout and we're going to see buyers responsive here. I mean, this is the whole part of reading the auction process and trading off of market generated information that the market provides us, and that's why auction market theory is such a beautiful style of trading to use, and it is an art. But when you have the edge, it is very powerful. Anyway, I hope you all had a great day and you managed your risk correctly. And I'll catch you all tomorrow in the pit. Any questions, as usual, please ask. Take care and goodbye.